Hi everyone, and welcome to our additional video for today. And this one can be easily called the double-digit disappointment. Why am I saying it? Because any stock that gaps down or gaps up more than 10% tends to be a great intraday mover. This wasn't the case for this Chinese retail or accessories manufacturing stock, Miniso or MNS. The symbol is MNSO. So what happened in MNSO? You guessed it right. Earnings came out obviously worse than expected, and the stock took a dive. You can see the daily chart, and first we can see here an ugly gap down. The gap down started at 15-16%, which means the stock was already a leader, a negative leader on the gainers losers list. In this case, on the losers list. So the stock opens down 16%. Okay, this is a clear negative signal. Now, obviously we can see it immediately after an hour or two, but you can see overall that the volume did increase 1,000%. So if the overall volume in the stock used to be or was on Friday 9 million shares, on a normal day it's a tenth of that, so 1 million shares. So the volume was not the problem, the liquidity was not the problem, the spreads were not a problem. So what happened? I guess investors and traders were a problem. Remember, it's not a market leader, it's actually an accessories manufacturer from somewhere in China. Okay, so you can see, guys, on the intraday chart, this ugly gap down at the open, and then after we reached basically 18 in the first couple of minutes in trading, what we did is basically stayed pretty much throughout the trading day 20 cents above and 30 cents below. Maybe there was a spike over 1850 that failed, but overall 18 was the magnet for the price action in the stock all day. So what was the trend in the stock? If anybody can answer, good luck with that. So the trend, there was no trend. There were some signals. Okay, 18 is a median play. Where we go from there? If you bet on the long side, you got to move in the morning session to 1850. Later on, it dropped under 18, and then it moved sideways 90% of the trading day. Maybe I'm exaggerating. Maybe 70% of the trading day was spent moving sideways. So was this double-digit move a good pick, a stock to focus on? Maybe for those who like to trade small caps, who like to trade low volume stocks, that like to trade stocks that are very liquid and you get in and out very, very fast. But the results were very, very, very disappointing for a stock that upfront promised a lot of potential. And when I say a lot of potential, it doesn't necessarily mean that it should have been a gap down and go. It could have been gap down and up. So a stock that starts down 18% can move up 5%. 5% is $1. So that's something that happens, can happen on any gap downer, as much as more continuation to the downside. So overall, you can see there are no guarantees. In this case, you try to move higher. You got maybe a scalp play, maybe a 2%, 3% winner. You try to move lower, you didn't get even that. Eventually, the stock was not a good pick for day traders on Friday. Thanks a lot for being alongside us with this video. I will post some info regarding this company from Yahoo Finance in the description below, and please like and subscribe. I will add more short trades and short trade management as we go along. Thanks for being here with us, and again, if you have any questions, do email us. We respond or try to respond almost to every email. Thank you, and see you in our next video.